everyone, Zach Pagoff here, and welcome back to another lesson video. Today, I will be going over the 14-5 text. So let's jump right into the video. Okay, so as I had stated before, I'm going to be going over the 14-5 text, which is the 5th lesson in chapter 14. And in this lesson, we will be learning about planning and recording depreciation adjustments. Alright, so there are some key terms that I'd like to go over before we start the accounting part of this lesson. So current assets are cash and other assets expected to be exchanged for cash or consumed within a year. Plant assets are assets that will be used for a number of years in the operation of a business. Depreciation expense is the portion of a plant asset's cost that is transferred to an expense account in each fiscal period during a plant asset's useful life. An estimated salvage value is the amount an owner expects to receive when a plant asset is removed from use. The straight line method of depreciation is charging an equal amount of depreciation expense for a plant asset in each year of its useful life. Accumulated depreciation is the total amount of depreciation expense that has been recorded since the purchase of a plant asset. And the book value of a plant asset is the original cost of a plant asset minus its accumulated depreciation. Okay, next we're going to be talking about calculating depreciation expense and also book value, and this is continued on the next slide. So when we calculate depreciation expense and also book value, the first step is to subtract the asset's estimated salvage value from its original cost. So if we take the original cost, which is $1,250, and we subtract it from the estimated salvage value, which is $250, that will give us the estimated total depreciation expense amount, which is $1,000. Next, we divide the estimated total depreciation expense by the years of estimated useful life. So if we take the estimated total depreciation expense amount, which is $1,000, and we divide it by the years of estimated useful life, which are 5 years, that will give us the annual depreciation expense amount, which is $200. Continuing on to the next slide, the next step is to take the accumulated depreciation from 20x2, which is $400, and add it to the depreciation expense from 20x3, which is $200, and that will give us the accumulated depreciation for 20x3, which is $600. And finally, if we take the original cost, which is $1,250, and we subtract it from the accumulated depreciation from 20x3, which is $600, that will give us the ending book value amount, which is $650. And that is how to calculate depreciation expense and also the book value of a plant asset. Alright, so the last thing that we're going to be talking about in this lesson is analyzing and recording adjustments for depreciation expense. So when we analyze and record adjustments for depreciation expense, there are a few steps that we follow when doing this process. First, we write the debit amounts in the adjustments debit column. Next, we write the credit amounts in the adjustments credit column. And finally, we label the two parts of these adjustments with a small letter F and a small letter G in parentheses. And one last thing to note here is that accumulated depreciation is another contra asset account that has a normal credit balance. So it increases by a credit and decreases by a debit. Okay, so that is the end of the 14-5 text. In the next video, I will be going over the 14-5 work together. All right, thank you.